About that surprising earnings announcement from Goldman Sachs last night. The report coming out earlier than expected, blowing away the analyst estimates. Brokerage earning $1.8 billion in the quarter. Per share comes out to $3.39. I mean, the estimate was only $1.64, so way above that. Goldman also announcing a plan to raise $5 billion with a common stock offering. Is then expected to use that money to pay back the $10 billion in TARP money that it received from the government. Could give Goldman an advantage, certainly, over its competitors who are still going to be subject to the rules from the government on executive pay and other things.
All right, today we're joined by Flynn Zito Management's Doug Flynn to talk a little bit about these markets and everything else. Doug, great to have you back.
Thank you.
First reaction to Goldman's news.
Yeah, I think that, well, they know how to make money, that's for sure. That's part of this. But getting that money paid back is a big step. We're a little concerned about the dilution of the shares that will go when you issue stock to come up with $5 billion. But getting that monkey off your back of the government is a good thing.
So short term, any dilution in the shares, which you know would be expected, and any other time you think the stock would be down maybe significantly today, but will that be outweighed by the overall confidence building measures put in place by Goldman?
Definitely. They still have another $5 billion they're going to have to come up with to pay back the full amount of money. But I think that it would, because I think the street thinks those guys know how to make money.
Right.
And in the long run, not having the government there to tell you how much you can pay your people, they're at a competitive disadvantage if some of their people can go to banks or different firms that aren't subject to the TARP restrictions.
Right.
So I think getting that in the long view, having that off your back is much better, and so pay that back, get that behind you, and you can move forward.
You say these guys know how to make money. If you look at their press release, though, it's down. I mean, investment banking is down, financial advisory is down. The Wall Street Journal says their fixed income, currency, and commodities, that part of their business is a quote-unquote black box. You really don't have a lot of details, but that's really what buoyed these earnings. So does it matter? I mean, do you want more details from Goldman Sachs? They say they have $164 billion of liquidity on the books, but they're still doing this $5 billion common stock offering. Why?
Yeah, that's a little interesting that they would need to dilute the shares again to try to come up with that money. You know, the way we look at it is you have people there. If you look at each person, a trader, if you look at them separately as their own profit and loss center, a lot of those people know how to make money. Now, on a bigger scheme, when that money kicks up to the top, if they're doing other things with it that offset it, it kind of gets lost. Some of the money that some of those people are making are getting lost by other trades that aren't making money. But there are a lot of good people there that do know how to make money. So if they can keep those people there, eventually all the other stuff will abate. There aren't a lot of firms that are doing a better job, that's for sure.
The details are not that important.
I mean, they're important, but when you look deeper and look at the individual people, there's a lot of issue out there.
Yeah, do you look at the individuals that closely as well?
I do, maybe because I know some of them, and maybe because I have, you know, we've run into them over the years, and you look at them separately. They, by themselves, can go to another company. If they're making money for Goldman, they can make money for any firm. And if they're going to be subject to making $450,000, they will go somewhere else. And then,
which is why this announcement is more about comp than anything else for from Goldman's point of view. They want to pay their people, and whatever to Jenna's point about whatever's going on under the covers at Goldman Sachs, at the end of the day, they want the government off their back to pay their people, and that's what this is about.
I would think so. I think that's in the long run how you're going to keeping good people is going to make you profitable when you manage the thing effectively.
Right.
And it's a long view. They take a long view. It's not a day-to-day thing. I'd like to have more details, but I think that's the way we look at it.
We may get some of them, by the way. Thanks, Doug. On the conference call Goldman's going to be holding at 7 a.m. Eastern Time. They'll discuss all the results of that. We'll take it live on Money for Breakfast this morning. It's interesting because all banks certainly aren't created equal. We'll talk throughout the morning about how some of these other banks are not in the position that Goldman's in to be able to pay back this money. Much more on Goldman throughout the morning.